Are you feeling like your paycheck just doesn't stretch as far as it used to? You're not alone. Millions in the UK are struggling to keep up with rising costs. But why is this happening and what can be done about it? Let's break it down. The wage stagnation problem. Over the past decade, wage growth in the UK has been sluggish. Adjusted for inflation, average wages today are barely higher than they were in the early 2000s. Meanwhile, inflation, driven by rising energy costs, supply chain disruptions, and global economic shifts, has eroded purchasing power, leaving many households struggling to make ends meet. One major factor behind stagnant wages is low productivity growth. Productivity measures how much output workers generate per hour, and in the UK, it has remained weak for years. Without significant gains, businesses find it difficult to justify wage increases. Underinvestment in technology, infrastructure, and skills training has contributed to this stagnation, leaving the UK behind other nations in digital transformation and automation. For example, Germany has invested heavily in automation and vocational training, allowing its manufacturing sector to remain competitive and sustain higher wages. In contrast, many UK businesses have been slow to adopt similar strategies, relying instead on lower wage labour. Without this investment, UK workers are often left performing tasks that could be automated, reducing overall efficiency and wage growth. Additionally, changes in employment patterns have played a role. The rise of precarious work, including zero-hour contracts and part-time positions, has made stable, well-paying jobs less accessible. Many workers face underemployment, where they are willing to work more hours but cannot find full-time opportunities. This trend has further weakened bargaining power, as workers with insecure jobs struggle to demand better pay. Take the hospitality sector, for instance. Many workers in restaurants and hotels have contracts that provide inconsistent hours and pay. A waiter might work 30 hours one week and only 15 the next, making it nearly impossible to budget or plan for the future. This instability prevents workers from demanding higher wages, as they fear losing what little job security they have. Economic shifts and the labour market. The structure of the UK economy has also changed. Traditional industries like manufacturing have declined, while lower-wage service sectors such as retail, hospitality, and care work have grown. Many new jobs offer limited opportunities for wage growth or career advancement. At the same time, higher-paying industries like finance and tech have seen slower job creation due to automation and offshoring. The gig economy has further reshaped employment. While flexible work arrangements can be appealing, they often come with lower pay, fewer benefits, and less job security, making it harder for workers to achieve financial stability. Many gig workers also lack pension contributions, paid leave, and employer-provided healthcare, placing additional financial burdens on them. Consider rideshare drivers. While some enjoy the flexibility of choosing their own hours, they often earn below minimum wage once expenses like fuel, vehicle maintenance, and insurance are factored in. Unlike traditional employees, they don't receive holiday pay or sick leave, meaning a sudden illness can lead to financial hardship. Moreover, demographic changes have influenced the job market. An aging workforce means that younger workers are often expected to support a growing number of retirees through taxation and social programs. This can lead to increased financial pressure on working-age individuals who may already be struggling to make ends meet. The rising cost of living. Inflation has hit households hard, particularly in energy, food, and housing. The war in Ukraine and the subsequent global energy crisis sent gas and electricity bills soaring, and while prices have stabilized somewhat, they remain significantly higher than pre-crisis levels. Supply chain disruptions and increased production costs have pushed food prices up, forcing families to allocate more of their income to essentials. For example, a family that used to spend £50 a week on groceries might now find themselves paying £70 for the same basket of goods. Staples like bread, milk, and vegetables have all increased in price, meaning that even those who carefully budget their spending are struggling to keep up. Housing costs have skyrocketed, with rents and property prices far outpacing wage growth. For many, home ownership feels increasingly out of reach, adding to financial strain. The lack of affordable housing has also led to increased demand in the rental market, further driving up prices. Younger generations, in particular, are finding it difficult to save for a home deposit while covering rising living expenses. Public transportation and commuting costs have also risen, disproportionately affecting lower-income workers who rely on these services. The increasing cost of rail and bus fares can take a significant portion of monthly wages, further straining household budgets. Corporate and policy factors. Many businesses, especially small and medium-sized enterprises, are struggling with rising operational costs, limiting their ability to raise wages. Larger corporations, meanwhile, have prioritized shareholder returns through dividends and stock buybacks over investing in their workforce, further contributing to wage stagnation. Executive pay has continued to rise, creating a widening gap between corporate leadership and frontline workers. For instance, a major UK supermarket chain recently reported record profits, yet its workers have been struggling to secure pay increases that keep pace with inflation. Meanwhile, top executives continue to receive multi-million-pound bonuses, exacerbating frustration among employees. Government policies have played a role as well. Austerity measures following the 2008 financial crisis led to cuts in public sector pay and benefits, effects that are still being felt today. While initiatives like the national living wage have helped some, they have not been enough to offset the broader wage stagnation. Critics argue that tax policies favor capital over labor, exacerbating income inequality and making it harder for workers to get ahead. Brexit has also had economic consequences. Trade barriers, supply chain disruptions, and reduced labor mobility have made it more difficult for businesses to operate efficiently, leading to increased costs that are often passed down to consumers and workers. The uncertainty surrounding post-Brexit economic policies continues to create challenges for long-term economic stability. What can be done? Workers across various sectors, including healthcare, education, and transport, have staged strikes demanding higher pay and better conditions. Beyond protests, grassroots movements and advocacy groups are pushing for policy changes to address wage stagnation. Economists and policymakers are debating solutions such as higher minimum wages, stronger labor protections, and increased investment in education and training. Some advocate for corporate governance reforms to shift business priorities from short-term profits to long-term workforce investment. Others call for targeted subsidies and structural reforms in housing and transportation to ease the financial burden on families. Investment in emerging industries such as green energy, AI, and digital infrastructure could create new high-paying job opportunities. Encouraging entrepreneurship and supporting small businesses can also play a role in boosting wage growth and job creation. The path forward. Addressing stagnant wages and rising costs requires bold action and a rethinking of economic priorities. The goal should be an economy where hard work is rewarded, families can thrive, and future generations have opportunities for upward mobility. What do you think should be done to tackle wage stagnation and rising prices? Share your thoughts in the comments below, and don't forget to like, subscribe, and hit the notification bell for more in-depth analyses.